Following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, this 25th day of March. And my pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time, just this very time that you're hearing me now. And at the same time, I do want to say thank you, Steve, for a great 2 hours. And, of course, we've got Open House. Open House, what does that mean? Go to the front page of TFN. Open House means you can see these charts all the time throughout the day, all of our charts. You can see what we're posting in the den. For instance, during the breaks, when I'm asked in the den about stock charts, I will quickly do the notation. You'll see the way I do the ChapmanWave notation during the break. You'll see how I identify the lowest trough. I find the next peak. Each successive peak gets a higher capital letter, A, B, C, D, etc. If you're looking at the charts right now, the one on the left is always the daily. The one in the middle I'm pointing to is the weekly. The one on the right is the monthly chart. And what did we do today? I gave a very lengthy presentation to my subscribers to discuss what we be doing today under certain circumstances. Now, you know that we went long on March the 4th, the DDM. That's the 200% long, the Dow. We're waiting for a peak D, but I also said, you know, I have to get a leg D in the S&P. Everything was pointing towards one more leg up at least, and I do say at least, it's very important to say that, in the S&P. And the S&P right now is trading at 1554.88. What did it do today? It did that requisite leg D. It's not a peak unless it makes a lower high bar tomorrow. In other words, it went above the high of 1563.62 made on the 15th of March. That's the one. Let me open it up a little bit so you can see it a little bit better. You'll see all these chart patterns that I've been discussing, the one-to-one extension, what happens when you get there, the kind of pattern that's forming right now. Now, I'm going to do something that if you haven't actually participated in the ChapmanWave methodology at all ever, it'll look kind of a little weird. But what it does is it's going to set up a chart pattern that says if certain things can happen, then here's a pattern you might be wanting to look for. Well, we have in my opening call, my subscription, we've taken positions now that was slightly at variance to what we've been in. And at the same time, we've got to keep in mind that this is really very important, and this is what I'm going to draw. You see that oval over there where it says neck, head, beak? Well, this, to me, appears to be the same kind of formation. I call it the ChapmanWave stalk leg formation. That's the leg. This is possibly the head. That's the beak. But there's something else that can happen periodically. It's like the birds are flying in sequence, but instead it's you know how birds fly at the same level, and then they might span out like a V shape. There's always a leader. I always wondered, how do they pick the leader? Do they vote? Are there lobbyists? I always wondered about that with these birds, but they all seem to know what they're doing. Well, they kind of seem, I don't know if they are, but they seem to do. So what is going on here? Open this up there. No. Why is it not opening up? Just one sec. There it is. Okay. That is what I'm looking at. And what does that say? It says two things. It says the MACD and the stochastic, these two indicators here, are turning down. The stochastic's now under 80%, and when I discuss this with my subscribers, the implications of the MACD and the slow stochastic. In this case, which one gets preference? That's number one. Number two is this particular pattern says, yep, you've made your leg D. Now you've got it in the Dow, you've got it in the S&P. The technicals are weakening. They're not very weak, but they are weakening. And the price is still holding above the 9-period exponential moving average. That's the black line. This is all the daily chart. Now, KJS in the den says they rotate. Well, they absolutely do. I've read that before, that the birds rotate leadership. I don't know whether it's to increase their prowess or whatever, but at the same time, what we're looking at here, I was just about to mention, the reason why I stumbled for a second when KJS in the den said they rotate, Basil, is because I was just about to say, we will find out very soon whether or not we're looking at another rotation. Meanwhile, back at the ranch during the weekend, I haven't mentioned it yet to subscribers. I was going to, I kind of ran out of time. I am looking at not one, but two sectors that have actually been on fire for months as becoming highly vulnerable. So now we're going to find out, and they were like the last sectors to keep holding everything up. Well, we will find out in the next week whether or not there's another rotation going on, and we'll find out whether maybe the bank sector is going to just hold up really well here as foreigners perceive that our bank system is doing well after all the chaos and havoc and debacle that occurred in previous years, and that we are now very much stronger. I don't know. So let me just run a couple of things down here. I'm going to take calls at 877-927-6648 in a few moments, but what I'd like to do right now is I'm going to run the numbers, and I'll run the numbers with the charts, and I'm only going to look at the I'm going to look at everything because we've just started a new week and it's almost the end of the month. What's really important in the S&P chart is that the S&P has gone to leg D in the weekly chart. But the MACD and stochastic are still very strong. MACD is still very, very good. The fast-moving average is very good. And the stochastic's at 96%. The daily says, be a little careful here. You can have a bit of a digestive moment, but there could still be enough residual strength based on the weekly chart to have another spike up. And the only reason why I mention this is for the reason there. See the SPY? The SPY has made... Even if I use a phantom peak for a peak C, I'm not going to go into that right now, over there at 156.80 made on the 14th of March, we've gone above the falling axe formation, and we haven't yet got that leg D in the SPY. It's a little unusual. In fact, it wouldn't even be leg D. It's officially leg C. I'm calling it leg D because I've used a phantom peak. I won't discuss that. And we haven't made that requisite leg D in the weekly chart. So there are divergences, and in divergences, what I look for is how is my one indicator, my one primary indicator on telling me about internal buying. How is that acting? And right now, that internal indicator, the VIX index, the volatility index, has a nice candle, but it's only at 13.58. If this week it breaks above 15.40, that was the high of the 19th, there's no question that 1607, the 200-period exponential moving average, will again become very accommodating, wanting to say, hey, hi, VIX, we have not seen you for a little while. And I'm drawing this in, and the pattern that it has to break, I can see it unfolding now. I'm going to do this, I'm going to do that, and we're going to see the fighting patterns. We're going to see which one predominates. But in the meantime, the volatility index is moving up only 4 cents at 1361, but it's a sign to watch. And therefore, I have no choice but to look at the TLT. Nice candle, holding the 9-period moving average. I've already drawn in the fighting patterns, the cup formation and the H formation. Going to be watching this really closely. So, did the Qs, 1, 2, 3, make their requisite leg D up? They had to get above 69.02. And what is the high today? The high is 68.96. Missed it by 7 cents to make leg D. It didn't have to do because that's a C1, C2. But the weekly chart is still acting quite well. So we have become very cautious in my opening call, having been long. We have now added shorts. I'm saying to the market, hey, market, you're getting kind of toppy. The Dow itself, if I go to this particular chart right here, this is my Dow chart that I sent subscribers. Subscribers, I don't know how it happened, but I overlaid a name for the Dow chart itself. The Dow chart went out, this one right here, with all the commentary here as well, the extra commentary. But I did resend one that says DIA, that's Dow Diamonds, _ 120-minute patterns. That's the one, if you want to refresh, that's the one to look at. And what we were looking at is we needed the Dow Diamonds to go to an extra high bar. So we'll look at this in the moment, for the moment, and the Dow has gone to leg E, and you see that up channel? It still remains in the upper part, the upper half of this up channel, and it's just hugging that 9-period exponential moving average with the Dow at 14,458, having hit a high of, all-time high of 14,563. And that gets it close to that red dashed line, and you'll notice that we've seen this before. We saw this earlier in the February period, where the Dow went just fractionally high to make those higher peaks. Look, 14,539 peak C, 14,546 peak D, and we don't know if this is going to be a peak E, but I'm putting in 14,563, like 15, 20 points. I don't like that. I want to see decisive moves up. I'm cautious. Let's put it that way. I'm cautious. I would like very much to have seen the Dow and the Dow Diamonds. Let me just go there right now. See, here's the Dow Diamonds, DIA. The Dow Diamonds went to 145.32. They missed by 4 cents, making peak D. Well, I don't know. I can't fight it. I just do charts, and it needs to do it, and it hasn't done it, and therefore we've taken appropriate action. And I suspect there's still going to be some buying coming in either later today or tomorrow or the next day. I don't know how much higher we can go. I think we are really close to some kind of a pullback. I'd say in the shorter term, and shorter term of consequence, but we'll see. Dow's down 69 now. S&P's down 449. Dow's weaker than the S&P. Run the numbers. The Dow's down 72 at 14,439. The S&P is down 2 at 1545. The comp index is down 12 at 3231. Gold was down sharply before. It's now down 2, so it's coming back a little bit. And the silver's down up 15 cents at 28.86. And high-grade copper is down 2 at 3.43. Man, that's not good. And crude oil is up 1 at 94.89, and bonds are up 1 penny at 143.20, and the dollar is up 50 cents. And I'll be right back to take calls at 877-927-6648. As I go out, those of you in the den, there's the dollar chart.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman. Tiger Technicians Hour. Dow's down 68. S&P's down 488. S&P showing more strength than the Dow. I kind of like that. It's 500 stocks against 30. Yep, I like that. Now, a couple of things. Look at the dollar. I circled this already last week. You see that pattern, that oval pattern? Let me make it a little bit bigger so that we can see. Let me also just get to something I want to look at. There it is. Let me open this up on the daily chart. See the daily chart? Now, remember, what did I say? In the ChapmanWave methodology, we look for higher peaks. And that low of 78.92 back on the 1st of February made a peak, a B, high peak, C, high peak, then a D, and a D on the 21st of February at 81.51 had a very small candle to confirm that it was a peak because it made a lower high bar the next day. That was on the 22nd at 81.48. Then it had a rather wide candle, and I call those a long-legged doji. And that long-legged doji invariably, no matter whether you go up or down, comes back to test the candle. And it did. The candle was between 81.57 and 81.67. And what does it do? It pops up, goes to a brand new leg A, pulls back, reverses their candle just to say, hi, I forgot my hat or whatever it was, or my sunglasses, and I'm off. And the next day it goes off. And that is what I call a ChapmanWave instant restart. So that's one peak D. Well, if it's an instant restart and it is a a legitimate instant restart, it should go to at least a peak D. It could even go to an E and an F. Well, what does it do? It goes to peak A, B, C, D. D, where the MACD and stochastic are just starting to become a little bit weak, but the price is holding the 9-period moving average on the 8th of March. Makes peak D, pulls back, holds a 9 EMA, pops up to 83.17 for peak E. And that's what I think the Dow has probably done right here. And then at 83.17, it pulls back. And what does it do? It sets in motion a particular chart pattern that says to me, and that's why I put the oval pattern in, to say there's a chance that if the dollar can hold while the technicals fail, it could create this oval formation. There could be one more pop-up to the upside to break out above 83.17, but we've got to watch this really closely, because if the technicals continue to slide in the daily, there's bound to be a pullback, and that pullback says if the dollar index breaks 82, closes under 82, that's very negative. But wait a minute. My left side, right side price time match has next week, the week of the 5th of April, as the potential for the dollar to spiral up and to get into, let me open this nice and wide so you can see these chart patterns. Look at this beautiful pattern. Look at this. This is a huge, it's kind of like a cup and handle with a double cup in between. But most importantly, what the dollar index is saying is, I've had a very strong move from 72.70 to 84.10 as my first two buy modes in the weekly chart. But it just wasn't strong enough to get to the 88.71 high back in June of last year, of 2010. But I'm working very hard to start to make higher highs and higher lows. And that says there's a real good chance that the 83.70 to 84.20 area will be a target for the dollar in this move. And if it does that, what's really important is it's getting closer to the 84.10 level resistance that was formed by that candle in the monthly chart back in July of 2012. But it also says if it breaks above it, we're now looking at the huge candle of July of 2010 with a high of 86.28. So we're going step by step. The first thing is to see how is the dollar going to do, because I still believe that although the Fed's losing it a little bit and the dollar, the Fed is being proactive for years, 2 administrations at least, if not more, in this cycle of trying to keep the dollar down. And if you look at the EUR-USD, that's the dollar, the euro-dollar currency pair, it is trying to form some kind of a base here. But if it takes out 1.28429, the low of the 19th of March, I hate it when they got all these numbers, that will say that the weekly chart is starting to break down. And the next level of support will have to be, 1.28 there. Next level will be 1.266. Wow, that is quite a beating for the euro. Well, we're doing one thing at a time. Euro has to break 1.305, preferably 1.31, to show that it's got the kind of strength that says, I can now start thinking about making a cup formation like this. And in fact, we'll talk a little bit more about it when I get back. Basil Chapman, Tiger Technicians Hour, 877-927-6648. Go to the front page of TFN right now in the break and check out the den. You can get it free up until March the 31st. Sign up.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. I've got a chart up here called my triple yields chart. In the triple yield chart, what I really look at is, let me just do this if you don't mind. Give me 1 second. Yeah. In my triple yield chart, what I look at is a 30-year, that's the white background chart. I mean, the black background with the white, there we go. So we've got white, gold, and cyan. And white is 30 years. The goldy brown is the 10-year T-note yield, and this is the 5-year T-note yield. They've all made peak E or F, and they've pulled back, but they've held very well. And what I'm going to do, I usually don't like to make this chart messy at all, but I'm just going to do it for now, and I'll take it away later if I remember. I'm just going to put in a support line, and it says that yields right now, if they break to the downside, meaning bonds go higher and yields come down, then 30.6, so it's a 31.39, the yield, the 30-year yield right now. If it breaks underneath 31, I'd say if it goes to like 30.70, it's broken that trend line. That says, oh, be careful, because it could come down to the 30.34 area. And that's the same thing with the uptrend lines of the others. So they haven't got very far to go to break that trend line. The way I'm assessing it right now, and this is going to be very important, is, let me just move this chart away because I want to show you something else. This is the dollar, the PowerShares DB US dollar bull, and it made a peak C 2264, 2264, 2258. It hasn't made a peak C yet, but it will make a peak C if it cannot break above 22.64 this week. And so far, it looks like there's a good chance it's going to try to do that. Now, the S&P, the SPY weekly chart needs to break above 156.80 for leg D. Yet the index itself has gone to D. So I'm seeing a divergence. So even though we've taken what I think is money management-wise and appropriate action in my opening call on certain positions, I think there's enough strength. If you look at the TLT is saying, I'm just stuck in this kind of trading range here in the weekly chart. I'm really, so far I don't show much strength, but I also don't show much weakness. So I'm stuck in that range. So this is what I'm really looking at. And high-grade copper is making a low-level consolidation. Now, if that consolidation breaks underneath, this is the May contract, if it breaks under 3.38, you got to watch out, because that's besides being at new lows based on from the November low, this is back into the August of last year area. So I'm watching this very closely. Now, here's the big thing. The volatility index, VIX.X, has very clear, there are repercussions on the shorter term. The weekly chart, to me, is still saying, don't make any presumptions on the weekly chart yet. You've got to wait the full week. Last week's candle was a long-legged doji, so even if you went above 15.40, there's a chance over the next week or two you'll come right back into 1387, 1367 area. However, what's most important is that if it breaks underneath, that candle says, be careful, was he going to come back here? So this is why I'm saying that I think we're now in the area of greatest resistance in almost all the indices. Now, if we had to look at the RTH, which is the retail sector index, that's in leg D. Now, what's really important about this, that's in leg D in the daily, it's in leg D in the weekly, and it's in leg F/B in the monthly. I'm not going to take this lightly. I want to say very clearly that this sector, this is the Market Vectors Retail ETF. Now, what did I read over the weekend? Was it this weekend or last weekend? That's right. Coolidge Corner is about to build, I think I mentioned this already, a third huge space, theater space. And this is when all the towns are crying out for more money, more money, more money. You've got icons within the town building these mega buildings. The way I'm looking at this, I was in Brooklyn last week. We were there last week, and I took a little time out just out of curiosity as well as other things, looking at some properties. And I have to tell you, I see this going on into the fall. This is the hysteria of buying. And it could certainly go into early next year. And then I think you've got to be really careful. So I have to consider that real estate as well as the markets have very strong indications of going higher. But at the same time, my big concern is that the rotation that we saw from in 2000, in the period of the 2000s, of going from an 80-something% decline in the NASDAQ to real estate, and real estate more than doubling, in many cases much more than doubling, and that pullback in real estate, pullback in some places, of course, it was a little bit more than a pullback, but I'm talking about it in an overall sense. If you had to include the heavy housing market, that is the number of houses and apartments, etc., in the northeast and the northwest, the coasts, I think that this is an aberration. That, yes, a lot's been done, but I still see some kind of a major top coming in real estate in the northeast at some point. And I also finally figured out, I figured it out a long time ago, but it just kind of the light went on. It just went, oh man, are you being silly? The reason why people are coming in with the cash to buy is because if you put it in bonds, any kind of bonds, besides the fact that the bond fund could turn out to be the bomb fund when the rates start to move higher, the fact is that if you take X amount of money and you put it into real estate, whatever your costs are, you should still make much more, even with taxes, than you do. And that, in essence, is the wrong way of looking at, for my opinion, real estate. The real way to look at real estate is if you get cash flow doing it in the appropriate manner. That's fantastic. If you do your homework and you understand real estate and you can get cash flow from actually it's preferable to get multi-family houses. That, in essence, is to your benefit. Because if you get cash flow from that, with a mortgage, which is now at such a low percentage rate, that's not using all your money. That's borrowing money and getting cash flow. So I just wanted to get some of that out, and now we can go back to the markets, because I wanted to look, why I'm doing this is that the Market Vectors Retail ETF, at the moment that you can't listen to a single politician constantly regurgitating this absolute misnomer that this is the worst economy since the Great Depression, blah, blah, blah. How can the retail Market Vectors ETF be not only at all-time highs, but look at this. It's not only at all-time highs, but it starts off in July. Let's imagine that in 2000 it was higher. So let's imagine that in 2000 it was up at about the 43.88 level. And now it's at 46.38, because it would be higher than it was at that particular point. Look, it's bumping into a resistance. It's in leg F/B. The MACD is very good. Stochastics just had that little bump that says, ho, I'm getting a little tired. I can go a little higher maybe, but I'm starting to get a little tired. So I'm trying to put this together, and what I'm really trying to assess is, when do we get our first double-digit decline? I don't think we're in for the double-digit decline just yet. I still think that there's enough residual strength to say, be a little careful here, because there could still be, in rotation, there could still be enough rotation to be able to get that IWM. Let me just go to I haven't finished my work here, so let me just go to IWM. Here's the IWM. That's the Russell 2000. Oh, wow, almost did it. The Russell 2000 ETF, it's the iShares. The weekly is in leg C, having made a breakout with a cup and many handles. A pattern that says to me, because it's making higher highs and higher lows, if that's in place and the MACD is at stronger than the stochastics at 90%, the IWM should still go higher into the summer. Into, I should say, the spring part of the summer. I'm going to give you rather than I'll say into April, but at some point late April to early May, I think that's where we get the double-digit decline. Now, I've covered a chunk, and I wanted to do one other thing. Just to finish up with the IWM. IWM needs 94.96, 94.97 to make leg D. I suspect it's still going to do that. The high today was 94.72, and it missed it by, did I say 94? Yeah, it missed it 72. It missed it by 25 cents. So I suspect it's still going to somehow do it this week. I see a choppy week ahead. I think we're real close to bumping into very powerful resistance, and it would not surprise. Oh, and if it does that, then it makes leg D in the weekly chart of the IBM. I have no choice but to wait for the Dow, which has made leg B, and today extended leg C. Oh, I'm going to talk about this just for a moment. I'll be sending this to subscribers in greater detail. I'm just going to say, I like to be as conservative as possible. One of the reasons why, every time I've tried to put this onto software, there are enough slight variations that the eye picks up immediately that machines don't really, at this particular point, pick up, that I'm saying my eye says that the high on the weekly chart in the Dow of 14,019.76 the week of the 1st of February, and then 3 points higher, 3.10 higher, the week of the 8th at 14,022.62, and then just a little higher at 14,038.97 the week of the 15th. I'm calling the week of the 1st to the week of the 8th a phantom peak. Why? I want to know I'm getting to a peak earlier. I'd rather get out at a peak C than wait for leg D that doesn't come. And that's what I do in this particular instance. And look at this. The weekly chart, 14,539.29. And then it goes up 6 points higher, 7 points higher the next week. So even there you've got very slightly higher highs. But the MACD and stochastic are very good. I'm not going to fight it. I'm just saying I'm going to be a little careful here. So I've got a chunk of that out. We got no calls today. Quiet day. So you know what I will do? I'm going to just quickly go. And thank you, Mike. Yes, I did get that email. So that seems to be working. I wanted to do IYT. That's it. The IYT is the iShares Dow Jones Transportation Average Fund. I've got it in a brand new leg B. I mean, come on, leg B. And the MACD and stochastic are still improving. And I've got the weekly chart. The fast-moving average of the MACD is flattening out, but fabulous. Looks great. And the stochastic's at 94%. The way I'm reading this, I'm saying to myself, that long-legged doji of last week tells me, yep, we can go a little higher, maybe to the 112 to 113.80 area, and the support is at 107.39. I would not be surprised if I needed to draw in some kind of a rectangle, but I'll start off right now with an oval formation, and that says there's the high, there's the low, and that's kind of what I'm looking at. And the oval formations really work best when they take some time, when they frustrate the bulls and the bears for many bars. In this case, it would be quite a few weeks. So I wanted to show that. And I also wanted to say that I do have, there's no other way I can count it. This is legs E, F, G. Yeah, I suppose it could be a G in the transportation index. I'll put that in as an alternate, G/C. So I am expecting at least one nominal new high in the IY. It doesn't have to come, but 112.31 would be perfect. So let me just quickly summarize what I'm looking at. I'm looking at signals that say, at this particular point, I believe that the upside is extremely limited, number one. Number two, the gains that have been made since the early March extraordinary up move, the chunk of those gains, I think, have been made for now, but I'm not looking at the downside. I think the downside at this particular point is still a single-digit downside until everyone believes that every move down is just going to be a single-digit move down. That's that stalk leg formation, and then out of the blue, sometime in April, late April, maybe it'll be May. I'm not sure. I don't know yet. I don't like to presuppose. I don't have a time. I haven't done work on the left side, right side price time match just yet, but I will be doing it this evening and tomorrow. But most importantly, I think that the double-digit decline, that's when it comes later on. I'll be back. Basil Chapman, 877-927-6648. Hey, time for some calls.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. And I did have a call. I did have a question. And that question was on did I just forget what it was? I do so many charts during the break. VNM, that's Vietnam. VNM, it's emerging markets, ETF from Vietnam, and it's gone sideways in the daily charts. I'm going to exclude that. What really is the issue here is, was this a right arm extension to a peak E in the weekly chart at 23.59 with the round number 23 low, and it makes 21.29 the strong resistance, and it's at 20.84 right now. That's kind of what I think is happening. I would not be surprised if there is a kind of a support level that's being formed right now, like a rectangle right there, and that we have to just wait a little while, because the monthly chart is finally starting to improve. And that says that if at any point this can go above 22.17 to 22.32, yeah, that would say, great, now it can go back and retest the high of 23.59. So right now I see it as neutral, but I can see it starting to improve if those numbers, if we can start to turn the 9-period moving, the 200-period moving average into some support. Now, let's do this. Okay. I got to think this through because I had written down, I have to look. Oh, LL. Is that something? Come on. This is leg C. Beautiful falling axe formation. Folks, that falling axe formation, that's the ChapmanWave technique of looking at lower highs and lower lows, makes an expanding V-shaped pattern or cone pattern. Look at the breakout in leg C. And this is Lumber Liquidators, bargain lumber products. This is a /F/B in the monthly chart. And the weekly chart is still very strong, and that's also F/B. So far, it's acting very well. So let me review. The HGX, which is the housing sector ETF, Philadelphia housing sector, is in leg D in the monthly chart. That says you've got to start getting a little bit cautious, even though the technicals are still very strong. Of course, it's way below the 293.66 all-time high, and they're way off the 54.31 or low. Now, what's really important is that I've got this in leg D in the weekly. You see how everything's fitting together to say, hey, we might go up some, but this is the time to be much, much more careful, cautious, careful, and very selective. I'm not saying you shouldn't have longs. What I'm saying is if you do have longs, this is where you need to have a much tighter stop. But I am, for my subscribers, we're starting to find more and more short opportunities, and that to me is really important. Now, the only thing I've left out here is gold. GLD is important because it's making this this arch formation that turns into an M. So the H, I drew it in there, becomes an M, and that's kind of what I'm looking at. So I don't see gold smashing at this particular point to the downside. And I just, at this particular point, I don't see it breaking out. Not until the dollar, DXY, not until the dollar shows weakness and it takes out, I'd say 82, but I'd actually say for gold to really get going, you want to see the dollar breaking 81.50, 81.70 to 81.50. Then I think gold can have a nice counter-trend rally. I call it a counter-trend rally. Why? Because my monthly chart is still saying, GLD, is still saying at some point we're going to break 148 support and we'll be going down to the 145s. And there's a down channel line that I've drawn, and that says at some point this year we're going to see the 140 to 138 to 133 area in the GLD. That's just the way I'm looking at it. Okay, so my service is the opening call. Go to the front page of TFNN. You can see we've had some great trades, and I will be back tomorrow. Stay tuned for Larry Pesavento and all the other hosts this afternoon. Should be great shows coming up. Thank you for being here. Basil Chapman signing off.